The next guest whom we are inviting has sprung some kind of a Diwali in the corporate results season. Havells is the stock on our radar, and it's, beaten expectations handsomely on all counts: margins, revenues, EBITDA, and one of those few companies in the consumer manufacturing space which has shown a year-on-year growth. Revenue is up 10% year-on-year, 66% quarter-on-quarter. That we can understand, but this has definitely been a very encouraging performance. Anil Rai Gupta, Chairman and Managing Director at Havells, joins us now. Mr. Gupta, I really don't know where to start, but okay, let me start with revenues and sales. Would you attribute it to pent-up, or do you think we can hold out hope that 10% or even better is doable for the whole year?
Well, thank you very much. First of all, not sure whether 10% is doable for the entire year, because we lost two of the biggest months for sales, both for air conditioners and fans, in the month of April and May. Yes, particularly this quarter, things started looking to come back. I would not really consider this as a fully a pent-up demand. Maybe in the initial phases like July or early August, there could have been a bit of a pent-up demand. But I think after that, the demand has been holding up, especially in the tier 2, tier 3 towns, rural areas. The demand is better. Things have moved better in the consumer and residential space as against the infra and industrial space in the second quarter. Hopefully that should start coming back in the third and fourth quarters with new capex coming in, with the government spending increasing. So hopefully, overall we should be looking at a good couple of quarters going forward. But it will be a mix of many things. Metro markets may start doing better. In industrial infrastructure should start doing better now.
Okay, Anil, good morning. This is a question which, of course, interests us as well. What about advertising? Is it back to pre-COVID levels, or do you see it getting back to pre-COVID levels?
Yes, it will get back to. So second quarter was a quarter where it was not back to pre-COVID levels. There was a significant reduction in the advertising spends in the second quarter. But going into the festive season and moving forward into the season for seasonal products like fans and air conditioners, the advertising promotion should start coming back to pre-COVID levels or normal levels. It'll be a bit different with more focus on the digital advertising as against just electronic and print media, but definitely it will start coming back progressively.
Well, even as you speak, there is a top band on our television screen saying handsome beat in EBITDA margins. That was the standout number. 17% margins, 700 basis point improvement. I think this advertising would have contributed to it. You advertised less. So what should we say is a sustainable margin?
Well, I think, in Havells' core business, if we see, we had been at levels of 13.5%, 14% in the past as well. So given the fact that advertising has been reduced by a couple of percentage points, and if it starts coming back to normalized levels, so hopefully, again, it's a question of a lot of product mix also. So this particular quarter, consumer products and residential products have done better. So that also has contributed to better margins. During the COVID times, there was a lot of focus on, relooking at each and every cost, both in the plants and the other parts of the company. So there have been efficiency improvements at all counts. I would say that it will not be the same levels of the second quarter, but it will be definitely better than what it used to be.
Mr. Gupta, just coming back to the demand drivers, the rural markets saw very good growth in this quarter. I understand that you've said there was a 140% growth in Q2 in the rural markets. Is that something that will continue over the next few quarters, or was it just a one-quarter phenomenon, this big surge? And also e-commerce, what kind of growth can you expect as we move along?
As I said, the tier 2, tier 3 towns and the rural markets have done better. The monsoons have been good. There has been more impetus from the government also to create more jobs in the rural areas. People have migrated back to their hometowns. So there is I believe that this demand should continue. Overall, also, the company's focus was to go deeper into the rural areas also, because even in the last couple of years, it's not just because of COVID, but in the last couple of years, we've seen electricity has reached to each and every village. The quality of electricity has continued to improve. The digitization access to the rural markets has also increased. So there is, I think overall, rural markets is definitely going to stay a bit. It's still a very small part of our business. It contributes only about 4.5% of our consumer residential space. But I think this growth will continue in the coming times as well. Even in the e-commerce space, the COVID has taught everybody that there are, different marketplaces, different aspects to reaching out the final product. So I think e-commerce is definitely going to take a bigger share in the coming times as well.
Okay, and would you go for a tie-up or something because e-commerce is taking a lion's share?
Havells' strategy has always been to be omnipresent. So we are in the traditional channel, we are in the marketplaces, all kinds of marketplaces. We also have our own store, and we've again done a very smart thing of combining our own store with the physical stores in the local neighborhoods also. So we don't want to have a particular tie-up with one marketplace, but we are definitely present on all marketplaces.
When you answered the margins question, I wanted to ask you, you said, okay, 17 is tough and it will be definitely better than your traditional probably 10% margins. Will you be closer to 10 or will you be closer to 17?
Well, we don't give guidance on the... See, the whole idea is to focus on the opportunity. I think going forward, hopefully things should start normalizing. We should look at the opportunity which India has. There has been disruption in the supply chain. In this industry, or unorganized play was also large. So definitely organized players are getting a bit of a market share from the unorganized sector as well. So there's a huge opportunity for growth, and with growth, efficiencies and margins definitely come about. So I believe that we are looking at better margins. It's very difficult to give a particular number, but I think the focus is growth in market shares and numbers.
Okay, the Lloyd's business has been profitable now at the EBIT level for the last few quarters, but the contribution to the margins has been low. At what point do you think Lloyd's can start to contribute meaningfully, and what would the trajectory look like?
Well, Lloyd is a business where almost 6 months contribute to a large amount of sales. So higher margins do come in the seasonal part where air conditioners sell most. Lloyd is still dominated by air conditioner sales. Almost 70% of the sales come from air conditioners. That's why we are adding more product categories to become more of a complete play, and we are not dependent only on one product category. So overall, we are quite satisfied with the development of the margins at Lloyd. This has come about because we now are fully integrated manufacturing facility for air conditioners. We are not dependent on outsourced capacities. So we have a much better cost control on the product. And going forward, I believe, when the season strikes, we'll definitely be in a much better position to have better margins.
Okay. Well, Mr. Rao, you put it very well when you say that organized sector has been taking unorganized sector's share, which explains why markets are doing well, but not GDP. Mr. Gupta, do you also benefit from the China factor? You're not dependent at all on any Chinese inputs. Has that aided sales or margins or market share?
Well, the China factor is, I would say during the COVID times it was a bit temporary, but I think the government is taking some definitive steps. For example, a couple of weeks back, it was announced that fully built air conditioners will be prohibited for imports, which is a very, very positive move for integrated manufacturers like Havells, Lloyd. I believe, government is taking the right steps, and definitely this will help. I would not say that it has helped last quarter, but going forward, it should definitely help manufacturers of India. With increased manufacturing capabilities in India, we'll also have the global markets open up to us. we'll have better economies of scale, and that would mean better exports as well. So I think it's a move in the right direction and especially, higher amount of manufacturing definitely creates more jobs as well. So all in all, I think India will be definitely a gainer with these kind of policies.
A final question to you, Mr. Gupta. Up until last year, you were, I thought, 60-40 an electrical intermediaries company and 40% a consumer durables company. Now it looks like consumer durables have stolen a march and reduced the gap. You're probably now 55-45 consumer durables and 55 cables. How is that cables and switchgears business doing? Will it be able to regain that share, regain its mojo? Mr. Gupta, can you? Okay, I think you've muted yourself, sir. You'll have to unmute.
Hello. Yeah. Can you hear me now?
Yes. Now I can. Can you tell us whether the cables business and the switchgears business does better than in the first quarter?
See, even a large part of our switchgear business and half of our cables business also goes into the residential sector, where large buyers are not necessarily builders, but small house builders, house owners who buy the products. So I would actually categorize that into consumer and residential. So if you look at Havells, almost 75% of the sales come from the consumer products and the residential products. And only about 25% comes from products which are focused more on the infra development and industrial development. And that is underground cables or professional luminaires or industrial switchgear and not the residential switchgear. So that's about 25%. Even in the last quarter, if you see, our consumer and residential business has almost grown 15%, whereas there is a lag over last year's sales in the in industrial and infrastructure sales. I believe that when it starts coming back, that will definitely contribute to a much higher level of growth for the entire company.
Okay. Just a final question, a very macro India Inc. kind of question. Has the economy normalized? Are you seeing it in the second half?
I would say we are in the right track for getting it normalized. I would not say it is normalized, but we are on the right track.
All right. Sooner rather than later, hopefully. Thank you very much, Mr. Anil Rai Gupta. It was a pleasure speaking with you. The stock's one-year chart should come up for you, has been a blockbuster performer lately. The Havells one-year chart, what was it? 400 and now 800 almost, 750.
Yeah, the only problem is it's the most expensive stock in this space. So perhaps at higher level there could be some profit taking, but you can't fault on the numbers.
Okay, actually there's another blockbuster number that we are going to discuss in a minute after this break. Cholamandalam Investment. I didn't expect to use the word blockbuster for an NBFC company, but the numbers were really good. Arul Selvan, their Executive Vice President